So if you had a certain marketing mix and it was working relatively well, you didn't want to move. You didn't want to move and change. And now, as there's more scrutiny and pressure on the performance of that, it's an opportunity to sort of rethink what your marketing strategy is.
I'm thrilled today to have our guest, Beth Ferreira, on our podcast. Beth, I've known for many, many years, and she is a partner at FirstMark Capital. For those of you who have not met Beth or heard of Beth before, she's an investor in some brands you most likely have heard of, including Glossier, Masterclass, Daily Harvest, and Justworks. Beth, it's a pleasure to have you on board, and maybe you can sort of tell the listeners a bit about your background.
Sure. Well, thanks, Jason, for having me. This is great. So my background, I worked in venture capital early in my career. So in the dot-com boom and bust of the early 2000s, made the transition to the operations side, was at Etsy, joined early. That's where I met Jason. And then went to a company called Fab.com. And then made the transition back to the venture side in 2015, where I started and ran WME Ventures with William Morris Endeavor, the talent agency, and then joined FirstMark about 5 years ago.
Got it. So you've certainly seen both the investment side and the operating side. I can tell our listeners, my last business was actually acquired by Etsy, and it was a fantastic and crazy experience at the same time. And Beth and I have sort of recounted many stories from back in the day together. We actually caught up for the first time in about 2 years post-pandemic over drinks the other day, and sort of relived a bit of a blast from the past. But really, getting into today's episode and sort of the core topic, on everyone's minds today is the stock market, access to capital, access to the operating plan for the second half of this year. And Beth, I think you're really uniquely situated as both a former operator and a current venture capitalist. And really today, the big question that we wanted to cover was really, this notion of as a former operator, as an investor, as a board member, how are you advising your portfolio to revisit strategies, cut costs, and focus efforts?
Yeah.
I think the market technically isn't in a bear market. I think it dipped below the 20% mark for a few hours, and it bit back up. And now the last couple of weeks have been a bit on the rebound, but certainly folks are shaken and people are sort of rethinking how things work. So maybe to kick off with this, first question is do you think we're in a recession?
We are probably in a recession, is my guess. All of the macroeconomic economic indicators are going to show that this is probably not a quick turnaround. It's probably a longer than we all would like, and longer meaning probably 18 to 24 months versus a 6 months turnaround that many people were talking about in January or February. But regardless of that, for early stage companies, capital is just going to get more expensive. And so, how do you think about that? And how do you think about your financing strategy when that's the case? And there's going to be a lot more scrutiny on things like unit economics and capital efficiency, particularly on the marketing side. And there's going to be a lot less patience for capital intensive businesses. So, and not that capital intensive businesses won't get funded, but there'll be a whole lot more scrutiny on that as well. So, to go back to one of the earlier points that you were making as you were introducing this is what do you do in that situation? The biggest thing is taking a hard look at your costs. It's what can you control? You're playing the game that's on the field, and it's a new game. And so, where there might have been a little bit more leeway to spend on headcount, and other, sales and other things, there's probably a little less leeway for that.
Yep. And across your portfolio, man, the big question that everyone's asking, I know Target had, a poor earnings report, a month ago or so, and, that really crashed the market for, a few days, and it was unclear how much of that is driven by actual changes in consumer spending versus, versus supply chain and other operational challenges that they've had. But when you look across your portfolio, how much of are you seeing headwinds around consumer spending and behavior, or is it mostly just access to capital markets and the broader stock market, as sort of we're all seeing every single day?
Yeah, we haven't seen a difference or a market difference in consumer spend yet. Now, I think we're anticipating that there might be. So, what does that look like if we're heading into a world where people might be thinking twice about their their discretionary spend. Now, that's just across our portfolio, and that's, a pretty small window into the greater world, but, it's still, strong is not the right word. It's been solid performance in the first half of the year. So we'll see. I mean, we have a company that's, launching a sales process. We had the bankers come in and talk about, how the performance of the companies that might buy this company, is down 20 to 30%. And so, what does that mean for the pricing of this sale? If we see something that's much more dramatic, there could be a bigger hiccup in the market.
Yeah, I was listening to Salesforce's earnings report this morning. And Benioff was pretty clear that they're seeing no slowdowns at all, at least from their customers, which is interesting. Yet I did have a conversation a few weeks back with a European retailer who sells a lot of products that are used for gifts. Sort of discretionary spending, and they are seeing a bit of a pullback with their business. So, even historically, Europe does sort of is a bit of a leading indicator for us as well. So it'll be interesting to see what it looks like. My personal take is I think we're in some sort of recession. It may be a relatively quick turnaround. It may be something that it's already happened, to an extent. And by the end of Q2, when we realized that we were in a recession, we're already on the backside of it. But that might be sort of the best case scenario, from at least from what I'm seeing. Let's actually dive a bit deeper into when you sort of think about your hat as a board member, and as you're sort of having that conversation, to your point, around unit economics, around high level goal setting, around KPIs. How are you coaching your portfolio? How are you seeing the portfolio and your in your investments, sort of shift some of their strategies relative to their highest level company goals?
I think the biggest shift is thinking about the path, and not necessarily profitability, but the path to profitability. And so, in having a very clear understanding of what a dollar in means from an output perspective. And I think many companies have been very focused on the top line growth and less focused on unit economics and profitability. And obviously, as we move into a different market, the lens in which investors think about these businesses change. So I think that's probably the biggest shift. And then thinking about just, how are you structured? Who's doing what? If I think it's also a moment to really think about the performance of every individual on your team, and also a potential opportunity to level up, because, as other companies are thinking about this as well, and people making shifts post-COVID, there may be opportunities to even level up on your team and rethink what the strategies are for each individual team.
100%. And certainly, one thing we're seeing, across our customers is, we look at folks who are trying to revisit their paths to profitability, revisiting the unit economics of their business. They're starting to see, at least from a marketing perspective, a bit of a shift from how they're thinking about acquisition across Google and across Facebook and across Instagram and Snapchat and beyond. And really asking, what can we do instead, to think about the lifetime value of our customers, to really think about really increasing the revenue downstream, and leveraging spend and opportunity from our existing customer base. What sort of budgets are you seeing in some of the the financial overviews from your portfolio relative to how they're spending on acquisition, and how they're thinking about doubling down on their current base?
Yeah. So I think overall there's been a hesitance to change. So if you had a certain marketing mix and it was working relatively well, you didn't want to move. You didn't want to move and change. And now, as there's more scrutiny and pressure on the performance of that, it's an opportunity to sort of rethink what your marketing strategy is. And at the highest level, the best companies have a diversified marketing strategy to weather the turn. So whether you were long, so if you were long on Facebook, you wouldn't have this big hiccup if something happens with the algorithm, for instance. So this has been a moment to rethink those things. I think there's absolutely, so as we're sitting there thinking about budgets, if there are channels or products that we're using that are working, there's plenty of dollars to be pushed into those products. It's not a cut and burn because the sky is falling. This is actually an opportunity to double down on what's working and winning, and maybe rethinking the things that maybe we felt like we should have been spending on, but maybe we might not need to be spending on.
Yeah, no, that's a great point. And I think part of what we're seeing in the market that sort of compounds that is, it's, from a public markets perspective, everyone has looked at some of the challenges that Facebook/Meta has gone through over the last couple of quarters as they've navigated changes to third-party cookies and a constantly evolving social media landscape, which quite frankly TikTok is really disrupting. And one thing we're seeing as a result is for our customers who are seeing success with their Facebook acquisition strategies, while in Q1 they were sort of white knuckling it and trying to figure out how to make it work. As we enter Q2, they're starting to ask, well, maybe this isn't necessarily a road we want to go down. And then to your point, saying, hey, well, if Facebook was profitable in Q4, it was break even or even a bit of a loss in Q1, is now the time to stomach a complete loss in Q2 with potential upside for figuring out, or do you just cut the cord and move on?
Yeah, and I get that it's really hard. I know companies are really afraid to lose that momentum on the top line, but it's a long-term game. And if you can get your unit economics to really work and those dollars are much more efficient, in 6 to 12 months, you're going to be in a much better place than that small potential dip that you had to take, sort of rethinking some of them, the channels that you're in.
Yeah, no, 100%. And look, I mean, I think, a question I like to ask every CMO we have, on the show, and I know, Beth, your operational experience spans many functions, including marketing. But if you were to grow a business with $1 million in revenue, would you rather that your revenue come from 500 highly engaged customers, or 1,000 mildly engaged customers, or 5,000, 10,000? I think the data is pretty clear that if you can have folks who are fully engaged, and really are brand evangelists, the network effects, and the amplification effects of that, really just, compound.
Yep. 100%.
Great. So maybe we can talk about operating models, and team structures. One of the things that we see across marketing technology is, oftentimes these platforms and the resources that support them somewhat live in a vacuum. There's sort of been historical tendencies with sort of data systems that drive marketing technology today to exist in a closed loop fashion. Just put this JavaScript on your website and you never have to talk to engineering. Obviously, with some of these cost considerations that are on the table, how are you coaching your portfolio, and what changes are you seeing relative to how teams are structured, how functions are centralized, et cetera?
I think we're seeing a move to more centralization and more cross-functional participation across the company. I think when you think about it, at the highest level, the best companies are run like the soccer team and not the track team. So this idea that the marketing is siloed, like it needs to permeate the entire organization, and the entire organization needs to understand, what that goal is. Because ultimately, your consumer-facing company, the goal of everyone is to get a consumer in the door, and marketing is the first level of defense to get them in, and then everyone else is sort of keeping them there and making sure that they're taken care of. So that absolutely needs to happen. And I think in some ways, as we're all forced to look a little bit more inward, it's a great opportunity to rethink those relationships across the whole organization, particularly as marketing and product and engineering all connect.
Got it. And that's a great analogy. I know you're sort of an avid soccer player. I actually played 2 sports in high school. I'm sure neither of which is as good as you were, but I did play some soccer and I did run track. But the track analogy is great because you have the guys doing pole vault, and they're just sort of live in a silo relative to the rest of the team. For any of our listeners who couldn't put 2 and 2 together, it took me about 30 seconds there. So, but no, it's a great point. And look, especially when we sort of look at our customers who have a bit of age, across their employee base, just in terms of how the organization is developed, you certainly just see redundancies of function and structures. And I think we're going to see, I think the trend you're seeing around centralization, is also going to align with other sort of strategic shifts that the brands are already trying to push. You look at how companies are rallying around centralized data. This is a bit of an organizational phase change as well. If you believe that having a complete view across the business is going to be a strategic asset for your organization, then the organization needs to orient centrally to the strategic asset. If each one of your functions across finance and marketing and support has their own IT functions, then they won't be able to leverage the centralized data investments that you're making.
Yep. Yeah, and I think another point is that this is a natural transition. So as companies grow, you have to rethink these things in some companies it's faster every 3 or 6 months. And some companies it's, every year, a year and a half. But this idea around how we're structured and how we use data, something that just a natural thing that as we grow, you're gonna have to rethink these processes and, information and structures.
100%. And obviously, as from your perspective as an investor in a set of tremendously fast-growing businesses, all in many of which you need access to capital. And from our perspective, as a company that supports both fast-growing venture brands and established enterprise brands, like we're all hoping that we can get on the other side of this as fast as possible. But I do think, to your point, this will minimally just induce an exercise that will make everyone stronger on the other side of things. Thanks, Beth, for coming on the podcast. It was really a great conversation, certainly during difficult times. As I said a moment ago, I think while every one of our listeners and the two of us included are hoping that we can get out of this, get to the other side of this as fast as possible. As with anything that comes up in life, it's important to look at the circumstances and ask how we can make the best of it. And I think there are certainly some high level benefits that can be had by it can really just be forced. They come from the changes in the macroeconomic environment, changes in cost requirements that can ultimately lead to a better business, more engaged customer base, higher customer LTVs, and better unit economics. But certainly getting there won't involve the same path that we all planned for in December, leading into 2022's fiscal year, at least for those who align with the calendar year.
Yeah, for sure. And I tell a lot of my companies, what's the downside of doing this? There's really not a whole lot. Rethinking, retrenching, and rationalizing the whole organization is just going to make you stronger on the other side. So I think it's actually a great moment to come out of this in a position of strength.
Great. Couldn't agree more. Well, thank you, Beth. And for any of our listeners who want to learn more about FirstMark Capital, you can go to their website, firstmarkcap.com. And thank you for everyone tuning in to this episode of the Data Unlocked podcast. If you'd like to learn more about Simon Data, please visit us on the web at simondata.com or email us at hello@simondata.com.